Hi all! Today, we continue to introduce our investment barbell strategy. We're going to get specific about the savings waterfall, how much to allocate to your 4 quadrants, and then we will discuss examples for each quadrant. We discuss the difference between accuracy and precision. I will show you how to use tools to be precise and how the investment barbell strategy helps you to be accurate. My name is Jeff Hewlett. I'm a decision confidence builder. I'm a behavioral economist and have been in banking and financial services most of my career. I'm also a faculty member at James Madison University, and I am a personal finance author. First, as a reminder, here is our financial roadmap. We have many investments and important life decisions. And we travel our financial road throughout our life. Here are the 4 agenda items for investment barbell strategy. Today, we're going to explore number 3. We will more deeply define how to implement the IBS. If you haven't already, I suggest you check out the 2 prior vidcasts. As a reminder, we will start with our essential risk framework. Let's discuss the 2 risk features, diversification and volatility. Diversification is the degree to which an investment component, like a single company, can impact the overall value of an investment. The more companies, the higher the diversification. Volatility, on the other hand, is the degree to which an investment varies above or below the average value of that investment. The more the investment varies from the average, the higher the volatility. The 2 risk features create 4 quadrants. Those quadrants are at the end of the diversification volatility risk barbells. The 4 quadrants are called cash, robo, real, and fun. These heat-related colors are inclusive of both risk and return. For example, for green, risk is the lowest and return is the lowest. Then, for red, risk is the highest and return is the highest. As an important guiding principle, our objective is not to eliminate risk. Let me repeat for emphasis. Our objective is not to eliminate risk. Our objective is to seek appropriate exposure to risk and eliminate ruin. The investment barbell strategy is devised to help you maximize your risk-return trade-off. This will be done via exposure to all 4 quadrants. While the strategy will not eliminate risk, it will eliminate ruin and maximize your return. The idea is to evaluate where your financial life is and make planning adaptations over time. Let's face it, the market is very dynamic. It changes over time, and so do the 4 quadrants. We encourage a progress, not perfection mindset. We suggest a quarterly review. It does not take very long. Next, I'll remind you of the entry point for the IBS. That is your savings waterfall. We discussed the savings waterfall in an earlier vidcast. You can find it on the website and YouTube. This starts with good budgeting and allocating your retirement savings. Building an emergency cash reserve. Use a robo-advisor for after-tax investing. A best practice is to take raises off the table by diverting raises to your investment portfolio. Then, when under 35 and building wealth, a Roth conversion is often optimal. Here are some tips and habits for implementing the savings waterfall. First, set up auto transfers between waterfall buckets. This is called a commitment device. The behavioral sciences teach us that commitment devices like auto transfers work really, really well. Investment programs like robo-advisors should also be automated as much as possible. For other long-term life needs, consider allocating your investments to college savings, 529 plans, target investing for home down payment, and for first-time home buyer savings. The periodic evaluations show you where you are and where to make planning adaptations over time. Now, let's discuss the difference between precision and accuracy. Precision is for how we implement our strategy. Precision questions are like, do I have a commitment device? Do I have a good robo-advisor? Did I set up my retirement plan? Are my taxes and bookkeeping set? If you were throwing darts, Precision is like how close the darts are to each other. However, just because one is precise does not mean we will meet our goals. Accuracy, on the other hand, evaluates the overall strategy quality. Accuracy is goal focus, like the bullseye in the middle of the dartboard. Good accuracy questions include, do I confirm my strategic quadrants periodically? Am I able to ignore volatility appropriately? Do I have the correct risk profile? The quadrant is where we manage the strategy. Each one of those four quadrants. The IBS quadrant is where we manage the strategy and the accuracy of our wealth situation to that strategy. On the other hand, implementation is where you seek that precision. Our portfolio or individual investments are where the work gets done to implement the strategy. If you play your cards right, the work is done by highly trained robots. Sometimes we recommend implementing the strategy at the portfolio level, and then sometimes at the individual level. Now, let's dig into the quadrants, starting with cash. This is the low risk, low return quadrant. The main value of having some cash and access to low cost capital is for capturing unexpected opportunities. Cash is for access to low cost capital and will also help if cash is needed in case of an emergency. The Federal Deposit Insurance Corporation, or FDIC, insured checking and high yield savings accounts. For cash, we recommend having multiple individual FDIC insured bank accounts at level 3. It is good to periodically check rates to ensure that you have the highest available interest rate. Next, we will dig into the robo quadrant. This is the highly diversified and higher volatility quadrant. Diversification is very important to eliminate your chance of ruin and exposing you to risk leading to higher long-term wealth. That's the volatility risk leading to higher long-term wealth. Consider a higher risk tolerance when setting up the robo account. The robo advisors generally use a highly diversified set of low-cost ETFs, but be realistic. If you lose sleep because the volatility is just too high, then pick the highest volatility you are comfortable. Over time, you can increase volatility as you get more comfortable. Remember, we're using a progress, not perfection mindset. Much of the segment may be accumulated through the years via 401ks or rollover IRAs. When you leave a company, it's a good idea to roll the 401k out of the employer's plan to a robo. The robos are less expensive and allow you to convert to a Roth. For the robo quadrant, investment level 2 is recommended, since the robos are managed at the portfolio level. You can do this yourself as an individual, but it would take much more expertise and time than I think it's worth. Next is the real estate quadrant. It is where we have our home, investment properties, or a real estate portfolio. This is the lower diversified and lower volatility quadrant. Housing remains a low volatility store of value, and homes consistently appreciate in the long term. Affordable housing can be challenging for first-time home buyers to get on the housing escalator. I have lots of articles on how to get on the housing ladder. Check out the Curiosity Vine and our vidcasts. Also, investment housing is often a good tax shelter. Think of an investment property as a standalone business. You can manage real estate individually with the help of a realtor or in a purchase portfolio like a REIT or a real estate ETF. Finally, our fourth quadrant is called fun. This is called fun because fun money is like money we're more okay with losing. This is where we take bigger risk, hunting for bigger returns with a smaller proportion of our wealth. Idiosyncratic risk tolerance is based on the time and expertise available to pursue the investor knowledge for buying into individual companies. As long as you have the expertise, this is absolutely fine. However, for most people, they do not have the needed investor knowledge. Personally, the vast majority of my fund money is managed at the portfolio level with ETFs, right? That is portfolio level 2. Next, our sampling of my fund money exposure. They are all purchased as ETFs. I'm into climate alternative energy market, the nuclear power market, the marijuana and CBD market. I'm into disruptive technology. So I have good strategic reasons for each one of these markets, and I'm always open to new ideas. Please DM me. I'd love to hear what yours are. So next time, we're going to do a live example and show you some of our tools. All the tools we showcase are available throughout my book. But until then, you've got this.